So do you reckon that this gushing of taps of liquidity took us a bit away from what the bottom would actually might have been? Maybe if this was not the case, the bottom would have been say 6,000, 6,500, whatever you believe. But because of this, it's becoming difficult to predict.
Yeah, so now this reminds me of Buffett speech. I think this was the best speech in the last 26 years. I would suggest that not only listen to him, but read the 42-page script. He has gone out of way to present those slides about the history of America and history of US markets. So there he, at pains, he suggests, I mean, I found that, in 1929-30, the example he is giving of 1929-30, where he's saying that from the bull run, I think Dow was at about 350. That crashed to about 200. And from 200, the markets recovered to 250 or 260. When it recovered to 250, 260, people thought that in 1920, he has given the dates. In 1929, when it recovered to 250 or 260, they thought that from 350 to 250 is good enough, and we have seen the worst, And then in next 2 years, it went to 42, from 250 to 42, almost 80-85% correction. So this is so you are in the biggest unknown. What do you mean by unknown? You don't know the outcome, and you don't know the probability of the outcome. I mean, if you don't know the outcome, what is the probability? So actually, we are all walking in the dark jungle. We don't know where is the way, which way it is going, where are the lights, and what will be how long we are in the jungle. Are we in for 12 months? Are we in for 24 months? And in what shape we will come out? One thing is for sure, this humanity will come out. That nobody has any doubts. But in what shape you will come out, that nobody knows. And how much damages will be there to each and every business, what authorities will do, so that nobody knows. So that's the kind of uncertain thing. And he's saying that when we are in the biggest unknown, don't try to leave your liquidity, because everybody is worried to ask him, why are you not buying? Why are you not using a $135 billion of your cash holding when it is earning nothing? Why you're not buying? So he's saying probably that is also not sufficient.
Right.
In fact, I would like to have some more liquidity on my side. And so much so, forget about buying the outside stock. He's saying that I don't want to buy my own stock. What he was buying in January, February at 30% higher price, he's not buying his own stock 30% lower. So he's become so cautious. Maybe his age. See, he's 90 years old. You can't take away the age from him, howsoever rich he is. So at the age of 25, you feel very different. At the age of 50, for the same situation, you feel very different. At the age of 90, what is there to look forward to? So, the pessimism and the fear is a lot more. So maybe he's extremely cautious. This time he was saying that this is a storm, the biggest storm one has ever had. Let's get out of it in one shape. That is the message he's trying to give.
So, another note as well, Mr. Agrawal, where he's saying the phone is not ringing off the hook, seem to suggest that he's sitting on cash. Buffett is saying that. What about you? Are you sitting on any kind of cash? And if you are not, because you might be fully invested, why is this the difference? Is it the difference of the age, the approach, or the markets?
This is the difference of the quality of money. He has his own proprietary money. That half of 400 odd billion or 370 billion their net worth they have, it's all their money. And their nature of business is also very different. Their mandate is very different. One, they are the world's biggest insurer, and their insurance underwriting in variety of things must be running into 15, 20, 30 trillion. So what is the challenge? What is the kind of claim they are going to get? Because they don't know, all the correlations are breaking down. Like you have seen in the oil, what happened. So what all will break down, he doesn't know. So there could be they might have calculated that out of 1,000 insurance contracts, say 10 will emerge in a year. But who knows if there are 50 contracts simultaneously coming for payouts? So that is his compulsion to sit on the cash. that let me sit on the cash and let me, right now there is no claim, but tomorrow if any claim comes, he said this word, he doesn't want to live at the mercy of friends and strangers. I mean, he doesn't want to beg before anybody because he will get the cash tap will open whatever Buffett wants at any point of time. But he doesn't want to bet on that. He wants to be fully ready to pay out on his own. And hence, because of his nature of business, he doesn't have a mandate from open-ended fund to go and invest in the market. I have that mandate. So my mandate is very different. His mandate is very different. My character of business is very different. His character of business is very different. So, that is where exactly the thing comes. And maybe and then he says that actually what he did, I think he's shocked by what has happened to airlines. So
Yes.
for 20 years, he badmouthed airlines. In fact, 2007 report, he wrote, great, good, gruesome. It is the best report ever written in 2007, 2 pages, page 6 and 7. And there I learned, one of the biggest learning in my life is from that 2 pages, great, good, gruesome. And there he said, the ultimate gruesome business is the airline business. Okay, come 2015, he buys 10% in all the 4 airlines. And against the whole world, he fights that the economics and the character of the business has changed. You see last year and year before the commentary, why he has bought. He has praised all over that airline business. So what he's, in fact, my learning from this time, the biggest, then I said, if you can change your color like this and you can suffer, he's now sold everything in one shot. He's saying, yes, the good businesses also become bad. But what is your batting average? What you have to see, there is nobody on this earth who can get 10 out of 10 right. There are businesses when you buy, because my appraisal is looking backward. My action is looking forward. So I am buying it looking as if airline business is terrific business. But the business is going to live by its own character. Finally, they have shown the character that in 1 month's COVID, they're all bankrupt. So the mistake is not with the management of the airlines. In fact, he has said all the CEOs of all the airlines are the brilliant guys. But this is external affair, which has killed the airline business. So, you can also go wrong when you buy companies. The businesses may turn out worse than what you thought. But every time you buy high quality business, you will score 7, 8 times good and 2 or 3 times dud. But if you are careless about whatever you're buying, then quite possible 5 times you will be shocked and 5 times you'll be honored. So that's the learning that boss अपना काम सही करने का, बाकी जैसा होगा देखा जाएगा.
So quick 2 follow-ups on this, very interesting insight. If you had a choice to sit on a bit of cash, the way Buffett and Munger have, would you exercise that choice right now?
Yeah, I don't mind sitting 5-10% on cash. But today, see, one is that I have seen in 35 years, it doesn't work. When do you get confident to see? In 10 out of 10 years, we have practiced zero cash. And today we get fearful. When do we become fearful? When the whole world is also fearful. So unless I'm so visionary that when the world is celebrating, I become fearful. वो तो है नहीं. See, हम तो इतने गधे हैं कि when the world is scared, उसके बाद हम scared होते हैं. सबने पीट डाला हमको, तब हमको समझ में आता है कि भाई यहाँ गलती हुई करके. So you must recognize how much capability you have. So I have seen it doesn't work. The moment I go in cash 10%, I'm telling you that is bottom of the market. I'm definitely sure about that. And the moment I never gone 110%, that of course that crime I've never committed, of buying 110% of my net worth as a stock. So, but my highest conviction stock has seen highest correction. Abhi kya bolne ka?
Okay, but the businesses would be good and therefore you might not be as worried. My question therefore then is, do you reckon that some of the businesses which were looking good, the way Buffett thought then that the airlines was good and then he's changed his course, in the Indian context, looking at all the scenarios and not just COVID, but even the shadow banking crisis, are businesses which you thought earlier were good, have they turned gruesome or bad?
Not gruesome, but they see since this entire act is external, on which management has no say. A lot of business, at least in our assessment, has changed for worse. Say like airline business itself. I mean, that is one thing which is globally gone bankrupt completely and completely gone out of shape. Hotel businesses, or I mean, among our own portfolio, say capital goods companies, the contract companies and things like that. So if who's affected worst? Today, government finances are most stressed, except that they have printing capability. But if there is no direct taxes, there is no indirect taxes. I mean, the only source of income for the government is the taxes. And who's paying taxes today? So the expenses are more than 100%. Income is literally 70-80% down. So what do you do? So my sense is that capital expenditure from private sector, because capacity utilization will come down. In any case, incremental capex is not required for a few years. Governments will also be constrained to put out money for infrastructure and all. So all the project execution, whatever has been awarded, will also go slow down. So for no fault of the companies today, I mean, I would say those companies will be, I mean, impacted negatively, or the positive feel which we had 1 year back, that is gone. So, there will be reassessment of a lot of these companies. Another thing in this Buffett seminar was that he said, we have not reduced from 10% to 5% and 7%. We have cleaned up 100% the entire, all the 4 companies. Because so when we have changed the view, we have changed it 100%. There is no point in doing this 70%, 60%. So that is another message. That clean up your portfolio, don't be messy.
Yeah, that's true.
So when you change the view, so that process is on, where you are selling one. Say like another thing, we are realizing that among the lenders, see, 30% of the index is banks. And that was the biggest winners in last 3-4 years. And now biggest impact of all the sectors is going to be on the banks. Because banks are the same bank is lending to good business as well as bad business. So good businesses will honor, but bad business will become very bad. And not so bad will become very bad. So the stress is going to be in all the lenders. As the COVID becomes longer and longer, the probability of survival of not so good businesses is going to be tough. Good ones will survive. And what will happen is that whosoever doesn't survive, that business will be shifted to the good ones. So that, what is going to happen is that when the economy is working at 70% capacity, so if everybody is break even at 70%, somebody has to give up. And the ones who are weak, those who cannot put up the working capital, they cannot put up the logistics, they cannot put up the IT, they cannot put up with the labor, that those companies will put down the shutter, and that 10-20% of that portion of the business will be locked into the good companies' business, so that the good companies can operate at 90% and the bad businesses will become zero. And that's how the market share shift will happen, and the good will become, and winner takes it all kind of situation, where the good companies will be winning and bad companies will be putting down the shutter as the COVID prolongs. And that's what market will keep doing. Market will keep becoming more and more, narrow, polarized. Yeah.
Okay. So actually, I have a quick follow-up, Mr. Agrawal. I'm guessing you are referring to financials. The market is obsessed with the weightage of financials coming down. What I'm trying to get is that all this while that we've interacted, you've said that the share of the PSU banks will move to private banks and they benefited. Now, are you saying that the share of the weaker hands will move to the stronger private banks or private financials? And part 2 of my question, therefore, is even though this is happening, would these banks also get hit in the near term, which is 6 to 9 months to 12 months because of asset quality issues that may come up, and could that bring the prices lower from where they are right now? Is it possible to predict that?
You see, directionally, I'm very clear that it is going to remain weak. the bottom will be made by financials, and the biggest gain from the bottom will be in financials. That is the story of all the what you call big debacle in the market. They are heart of the economy. You cannot live without them, and yet they're the guys who are hurt deeply, and nobody knows in what shape they will come out. RBI, government, everybody will try to safeguard them. But you and me, another thing Buffett said in this, see, there are a lot of these things were there. That's why when you read the script, you get to see this. He says, fear is more contagious than the COVID itself. He has used that. I think he said, Peter Popper or some, I mean, like in front of fear, COVID is like no comparison, he says. He used some fantastic thing, American slang, which I didn't get. But he's saying the fear is more bigger damage than the COVID itself. You can learn to live with COVID, but not with the fear.
One more thing that he said. I mean, I was awake for a while I was listening to him. So when he was questioned about why Berkshire Hathaway is not buying stocks, he said that we've not done any kind of buying because we do not see anything that attractive to do, or it may change very quickly. Now I draw back our attention to our markets, Mr. Agrawal, and you had said back, and as I said at the start of the interaction, that who knows, 7,700 may be a bottom. My question is not about trying to figure out what the bottom is. My question is, are you currently not as overweight equities as you have been in the past? And what will make you change your stance? Would it be vaccine? Would it be something else? Would it be earnings coming back? Or would it be economies opening up in full throttle? What will make you change your stance from whatever it is right now? So first your stance currently, and then what will make you change it?
No, my stance is very clear. I'm 100% invested. Okay. And fortunately, there's not much of redemption. So clearly, we have as much money our clients have given that is there, and they have been very kind. And we are 100% invested. But there is a change. There is a very, very clear, perceptible change in the portfolio. We have been shifting from what we think is not so good to what we think is going to be the much better. Because even in crisis, there are some businesses which are positively impacted. Out of 10, 7 businesses are negatively impacted, but 2 or 3 businesses are positively impacted. Like I would say telecom. I mean, of course, we can see the technology and everything, but I never realized the importance of tech and telecom as we got into the thing. I mean, the biggest difference between Ambi Valley and Mumbai is the quality of internet. So it is worth living. I'm telling you. So you have in a unique situation where bandwidth consumption is growing. I don't know at what rate, maybe 10% compounded per quarter, or maybe even more. Right now, it's a very abnormal situation. But now, I mean, kids are doing their homework online. I don't know. I believe 1 hour of Zoom login by one person is half gigabyte or something like that. So I did one conference call where 31,000 people logged in for 2.5 hours. You imagine what kind of a data it consumed. So I think we are into freaking out on the data side. And here is a consolidation taking place in the telecom in India. And so what I'm saying is that there are some businesses where there is a positive impact. And then you have this financials, you have the airline, you have the theaters where things are going down. So you have to calibrate and do some shifting from one side to other. And that's what we are doing. So we are active in the portfolio, but we are not sitting on cash.
Not sitting on cash. Just one, by the way, people, you can send in your questions and I'll try and take some. By the way, Mr. Agrawal, somebody's put out that slang as well that you spoke about, piker. Yeah. I think he said that fear is the most contagious disease you can imagine. It makes the virus look like a piker. A piker is the one who gambles or speculates with small amounts of money. Yeah, that's the term.
Yeah.
So I think Manish Nath was kind enough to give us those details. Okay, one of your friends, he said, I just want one small point from you on because you own an AMC as well, or you run an AMC as well. Your friend Shankar Sharma in an interview recently to me told me that fund management community they always say it's a good time to buy equities. Why is it that nobody thought at 12,000, 12,400 and said that, okay, it looks risky. Let's get out of the markets. Let's try and sit on cash. Why doesn't that ever happen? Why is it always a long only strategy from people? Any thoughts on that?
Yeah, but our mandate is to be long. See, our mandate is not to time the market. At least we have told very clearly, even with you or anybody, it is very clearly told that we are not going to time the market. We are not competent and no uncertain terms. And I have never practiced timing the market. I was always a fully bought. So when we say we are not long short, we are only long only fund. Okay, long only means I'll be having almost 100% equity all the time. And it works wonderfully well over a period of time. Because see what happens, Niraj, that people are not, I'm not referring to Shankar, but what happens is the rally from bottom to say first 30-40% is for the people who saw the bottom in the portfolio. The persons who time the market, they will never get that first 40%. I can tell you this. The way we don't get the first 40% drop from the top.
Yeah.
Oh, that is how the nature has been made. You will miss out the top 40% and you will miss out the bottom 40%. Now, what is left is a very useless slice. When you time, you are going to get it wrong both sides. You're not going to see, you're not going to get, I have not come across anybody so far who sold at the top and bought it at the bottom. What is the point? We are not going to run away from the market. I also get insights that, yes, it is going to be somewhere close to top. In fact, in Calcutta, I did say, after three times 65% correction in my portfolio, it looks fourth time, chauthha time, bulawa aa gaya. So I told them, in my portfolio, I am looking at some 50-60% correction. I'm mentally ready. I'm not wishing that it should be 50% correction, but I'm mentally ready to see those kind of corrections. So you cannot, but who knows? Market tomorrow somebody announces there is a killer medicine, killer vaccine. The world is floating in liquidity and fiscal stimulus and monetary stimulus. Market will do 3 limit ups. And then after that, you'll wake up and say that, sir, what do we do? So let's keep this market side one way. I'm very clear. I'm not competent to time the market. Let's try to find good companies, because there are very few good companies. And as the COVID has come, COVID will go. That nobody has any doubts, whether it takes 6 months or 1 year. But post-COVID, there will be fewer good companies. Not a single new companies will come. Not a single new company will come. And hence, when we go to $5 trillion economy, instead of 10 companies participating in that, there won't be 5 companies participating in that. So as we are sitting, when the bad companies are going down, the actually intrinsic value of good companies are increasing.
Okay, that's an interesting insight too. By the way, I remember our conversation at the media event that you had. That you had said that there are some risks that are apparent on the horizon, and nobody thought of COVID then anyways. But okay, let's try and talk about these intrinsic values of businesses. And in an interview that you did, Mr. Agrawal, you had mentioned about how the game plan or the scenario for autos changes if crude is trading at $30, right? Crude at 60 is a different ballgame for electric vehicles. Crude at 30 is a different ballgame. But there is decimation in salaries. People have lost jobs, etc. Even if we were to return to a normal post-COVID world in 3 months' time, do you reckon the scenario for autos will be different? And how different? How do you approach this now? Any thoughts?
So auto will be a very interesting one, because now distancing will be order of the day. And because if the COVID remains much longer, if it is not a killer medicine is gone, so then there will be a natural instinct for the people to travel in their own automobile and whatever they can afford. They can afford motorcycles. So I think there will be an immediate adoption to a lot of motorcycles. And they are seeing wherever it green zone, they open it up. There is a robust demand for automobiles. So automobiles and small cars. See, because whether you sit on a Mercedes or a Maruti, how does it matter? You are getting the full isolation. So yes, you get the same service. There's no difference in the level of risk. So I think, and then, we have still not transmitted the benefit of the low oil prices because of our fiscal stringency. Government has decided not to pass on even a penny out of that. So, but I'm quite sure once things stabilize, they will definitely pass on. You cannot have 70 rupees petrol price even at $35. So like then you'll be collecting about 70-80% only tariff, and actual petrol price will be like 20% or 25%. So I think, I mean, it all depends on how the future unfolds. We never thought that when the oil will come down to $35, we'll also have COVID. So it clouds your mind. See, your interest rates are going lower and lower. As the economy slows down, savings will go up. All the people who are sitting home, everybody's savings levels have just shot through because they're not spending anywhere. And that's why the bank deposits are going up. So a lot of these correlations are breaking down, which we never thought it will happen. And hence the interest rates are falling continuously. And we could see history's lowest interest rates. I mean, we could seriously talk about 5-6%, like European countries, 5-6% types of interest rates. They are in zero. We might be at 4-5%, which is a very different kind of a thinking, you know. So that will, so your cost of running, total cost of ownership is about your EMI, your petrol diesel prices, and your need. All three are positive. The only thing negative I see is that at some point of time EV can come, but that is 10-15 years away. So right now you have to buy one of the petrol diesel kind of a car or motorcycle, and I remain like fully allocated. Actually, we are little overweight on automotive, on two-wheeler as well as four-wheeler.
The other point, Mr. Agrawal, and just one more sector-specific question. Then I would want to get your sense on asset allocation, but there are a couple of questions around this as well. There's this large gravitation towards pharma and specialty chemicals because they make these things that the world might be needing right now. Is this the start of a multi-year kind of a cycle? Is it possible to analyze, give some thoughts there, on both these?
Yeah, I'm not good at it, but it is much more lasting than, see, there are two things. One is that actually what is the need for next 12 to 18 months. I'm just giving you a 12 to 18 months for COVID period. So at that point of time, clearly, whatever is the extra COVID related stuff there, that of course will be extra bounce. But I think what is another thing is that everybody is so heightened fear of health, that they would have extra buying of their medicines. But negative thing is that since we are doing a lot of self-distancing, eating home food, a lot of hygiene, washing hands, and a lot of precaution, and people are now living more in villages and things like that, that may lead to much lower level of infections and general level of disease. So that might require lesser medicine. So on the whole, secular increase in the medicine demand, except for a few of them where they have the what happens and second is that it's a regulated sector. So what the regulator is saying. So typically what is happening is US regulator has become, I would say at least from the act, that they have become far more lenient in passing the US FDA approvals and things like that. Because they want the medicine. So India has become the pharmacy to the world. And now second thing is that so-called the export-oriented kind of pharma companies, they were suffering from price erosion. Now that price erosion concept is at least gone for some time. Is it for some time or permanent? That I'm not the authority. But I would think that we are good for 2-3 years.
Okay. You look at a lot of small sectors when they are beginning their journey, Mr. Agrawal, and identify them as large 10-year potentials. Have you any thoughts on specialty chemicals? Because there are disparate views. A lot of people believe this is the start of something that maybe IT or pharma was a few years ago. Do you have any thoughts?
No, you're talking about specialty chemicals.
Yes, a lot of people, there's a lot of fanfare around it, yes.
Yeah, because of this Chinese, bar and things like that. They have barred some of the chemicals to be made there. Hence the world has locked down to all Indian chemical companies. But I've not been lucky to log into one and make money. So I've not applied my mind, but this anti-China movement worldwide is real. So yesterday I was talking to one gentleman. He said it is 1+1 formula. So what is 1+1? If they're sourcing from China, they want one more alternative source. 1+1. One is China and +1 is say India or Vietnam, whatever. But they definitely want, they don't want to be remaining only one. They want 1+1. Now, where this +1 will go? See, China is very big. Chinese, if say there are 1,000 corporations working in China, all 1,000 cannot go to one country, like say Vietnam or Bangladesh, or they cannot just accommodate. They don't have the capacity. The only country where bulk of the +1 can come is India in terms of capacity. So eventually, this benefit was there in the past, but now the corporations are pushed to come to India, not at the lowest cost, even at little higher price, 5%, 10% higher price. People are willing to look at +1 as India sourcing. And India is, this time he was telling me that Indians have gone very organized way, and I believe CIA and government authorities, they have chosen 1,500 global corporations to make one-on-one representation about this. So they are going about very seriously, and the businesses where this will happen far more easily are the businesses where they have done already 10-20%. So there is no zero date or anything like that. There is no teething trouble. Already you are buying, say, 10,000 tons from here. Scaling up to 100,000 tons is easiest, because your client has already tried your services, your logistics and everything. It's just scaling up. That will happen far more faster, I would think.
Okay. What is Raamdeo Agrawal, the perennial equities bullish man, thinking about asset allocation right now? For your funds, you have a mandate to be invested. That's fine. But and I know one size doesn't fit all. So viewers, you have to take this with a pinch of salt. Mr. Agrawal's strategy might not be one shoe size fit all. But what is your thoughts, Mr. Agrawal? Gold. I'm sure you've not looked at Bitcoin, so I'll avoid that. But gold, real estate, cash, fixed income, equities. Any thoughts?
In fact, if anything is emerging as winner right now, despite all the trouble, I think one is the return, second is the liquidity. Even debt has given a little surprise, nasty surprise. But you cannot displace the role of debt, because role of debt typically, at least in India, the way I understand, is that it's a capital guaranteed, and you get 2 to 3% higher than the inflation. So it basically protects your current value of your wealth well into the future. Say you make, say inflation is 5%, you make about 6-7% on that. You are basically protected from the decline of value, underlying value from inflation. So it's a wealth preserver. So I would think that still debt and equity are the main categories for allocation. Gold is just a fancy stuff you can put. I'm surprised by the performance of gold, and a lot of people are very bullish that China will buy, this guy will buy, that guy will buy. But fundamentally, that asset doesn't produce anything.
That's right.
That Buffett call, that was, there are only two types of assets in the world. One which produces something, and one which doesn't produce anything. So gold falls in that, which doesn't produce. Every company is producing 20-25% ROE every year after year. I will go to that. It is giving me on my 100 crores capital employed 25 crores profit. Should I go to that particular machine, or should I go to a machine where I have to put another percentage just to keep it in safe custody? So, to that extent. But of course, it has many more other qualities in terms of people's belief about the gold. So, and now there is a gold certificate available from Government of India. So you can buy at 2.5% kind of yield, as much gold you want. So it's actually emerging in India as a good asset class. I think newer asset class, I would say, is the diversifying globally in equities. So you can buy NASDAQ, you can buy S&P 500 US in India through ETFs. So that looks to be, because if you want to buy technology, the global technology, because Indian companies are not technology companies. Indian companies are technology services companies. But true technology like a Zoom, like a Microsoft, like a Google, that you can buy only in NASDAQ. So putting some money out there, though they are almost at all-time high, that shows a very strength even in this kind of uncertain time. They are closer to the highs than lows. So I would think that we should start learning to diversify there within the equity. Say if you have 50% debt, 50% equity, in 50% equity, at least 10-15%, you should start thinking of, getting into S&P 500 or NASDAQ ETF. I would prefer NASDAQ because that gives me a very clearly global technology, high growth companies, option which is simply not there as an equivalent here. So that's how broadly I would look at my asset allocation. But role of debt remains in the sense that the portion which I don't want to take risk in, because risk, see, one of the biggest learning for me now is what is the risk? What is the definition of risk? And we all, the fund managers and the entrepreneurs, we are nothing but risk managers. Risk stops here, and risk will find you somewhere, and risk will come in a completely unannounced way. Who the hell knew on 1/1/2020 that COVID is going to kill you, all of us? COVID is going to be literally stampeding, steamrolling the entire global economy. So, and just 4 months, still it is 4 months. 4 months back, no economists, nobody told us this. And today we are facing this music. So what I'm saying, the risk will come. So we have to protect ourselves from all kinds of risk. So we have to be extremely judicious. And risk is actually sitting on our head right now. It is no more expectation. We can say that this vaccine is coming, that vaccine is coming, but show is still on. So
that's true.
So we have to be extremely careful in managing our risk.
One last question, Mr. Agrawal, and I don't know if you have an answer or any serious thought to what could real estate do, commercial, residential prices, etc. If you have, then great. If not, can I end this session with asking you about what do you think would be the leaders of the next bull run? Everybody says the leaders of the past bull run are never the same. Whenever this bull run starts, what is your thought there?
So, my sense is that tech and telecom, particularly telecom in India, not so much tech in the sense that we don't have that fancy tech product companies and things like that. But I think telecom and tech, and pharma, these are the segments which will, depending on the underlying company's performance and what COVID does for them, I would think that could be one leader. But ultimately, these are not the segments which can take 30-40% of the total market cap. You have to also see where the market can be very, very large. That's called real leadership. So financials which went to as high as 40% of the entire kind of market cap, that kind of leadership I don't see emerging from any other sector. But financials themselves will first give up the position. Maybe it will come down from say 40% to 25% or 20%, whatever. I don't know where the bottom is. But again, I would say that will be the most exciting segment to make money. That's my sense.
Okay. Well, we'll wrap up this session because we have going for the next session. There are a lot of questions. I've tried to answer some of them. There are some stock specific questions which I obviously can't ask Mr. Agrawal, so we'll leave that out. Just one question that has come on buying stocks for overseas listed companies, any proper broker, source, etc. There are multiple options like Stockal, Vested, etc. And there are options like the ETFs that Motilal Oswal and some of the other funds run. So I think you can look at that as well. But Mr. Agrawal, it's a pleasure as always talking to you. Thank you so much for speaking to us today.
Thanks, Niraj.
How many places can you be at once? What if we said 9? BloombergQuint Live. We are everywhere.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women buyers across the top 8 cities. And finally, women are not just buying homes to live in, they're also investing in real estate.
I think real estate definitely is the step above jewelry.
So it's my personal endeavor that Puravankara and Provident are the first choice or the first place women home buyers come to buy a home.
I think it's that feeling of kind of apna ghar.
नमस्कार, आप देख रहे हैं राजपथ, हिंदी क्विंट, अंग्रेजी क्विंट और ब्लूमबर्ग क्विंट पर। और ये चर्चा हमारी हो रही है छत्तीसगढ़ के मुख्यमंत्री श्री भूपेश बघेल से। सर, आपने हमारे लिए वक्त निकाला, आपका बहुत शुक्रिया। छत्तीसगढ़ में जो आपके अनुभव रहे हैं कोरोना से लड़ने के बारे में, हम उस पर आपसे चर्चा करना चाहते हैं। लेकिन पहले मैं शुरू करना चाहता हूं, क्योंकि पिछले हफ्ते में आपने पूरा देखा कि केंद्र सरकार ने कहा कि 20 लाख करोड़ के एक बड़े पैकेज का ऐलान किया जाएगा। लॉकडाउन 4 में कुछ रियायतें दी जाएंगी और राज्य पर छोड़ा जाएगा कि वो क्या करे। वो हम आपसे समझना चाहते हैं, क्योंकि हमारे लिए तो दरअसल जो व्यवस्था देश में है उसमें मुख्यमंत्री भी जो है वो फ्रंट लाइन वॉरियर है इसमें, क्योंकि ग्रास रूट पे, ग्राउंड पे काम उसको करना पड़ता है। पहला सवाल पैकेज के बारे में, मैं एक मुख्यमंत्री के नाते आपकी राय जानना चाहता हूं कि आपको इसमें क्या मिला।
देखिए, 20 लाख करोड़ के जो पैकेज है, ये समझ लीजिए बजट के को रिशेड्यूल करके निर्मला जी ने